All right, traders. Just a quick video on what's going on in this Nat Gas market right now. You could see the move that this is making, and I want to talk about ways to kind of play this move and what you want to be aware of with some of the products that try to track Nat Gas futures. So I'm going to get into a couple things like UNG and Boyle and what the positive and negative of these products are. So first, and my background in case you're not aware is I used to trade block trade ETFs, for Merrill Lynch, Bank of America, Merrill Lynch, back in the day. So I used to have to make markets, in all of these types of products. And when you have to do something like that, you have to learn the mechanics of how these things behave, especially if you're making, if you're making markets for huge block orders for hedge funds, right? So that's a little bit of background. Now let's talk a little bit about what is going on in the technicals in Nat Gas futures. I view this as a pretty bullish development, and I did get long some UNG yesterday, and I'll go over that product in just a second. But let's talk about first, always. It's important to kind of look at the underlying asset. So if you are trading something like UNG, right, and it's the same thing with, I see people quote all the time like SV, different products that try to track the VIX too. Always want to go to what the actual market is. So in this sense, you're always going, always going to look at the underlying first. And it's the same thing with leveraged ETFs. I see a lot of people play SOXL, for instance. You'll never see me chart a leveraged ETF, right? I'll chart the underlying, what it's designed to track. So, the actual semi ETF, SMH, for example, right? I'll always look at that first. I will never do any charting on a leveraged ETF. So why am I getting into that conversation? Well, because Nat Gas, there's just not a lot of things that you can do to other than buying the futures, which is fine. Like that's the right thing to do, to be playing a move in the Nat Gas market, is to trade the futures. Now, if you're not a futures trader and you don't have a futures account set up, right, then you begin to look for alternatives. But yes, this is so what I like about this is it's been going sideways for a long time, and it's beginning to come out of the sideways pattern. Also look at the super tight value area, which just means that the price action, once it starts to get out of range, right, it could really become a fast and aggressive move. So I'm looking for a target in Nat Gas futures 337, right? And if it could manage to get above that, you could really see this thing begin to move again, because it's been going so sideways for a while. So if you don't have access to trade futures, then really the next best thing is probably this UNG. Now, I am not a this is not a favorite of mine, because like any one of these ETFs, it's important to understand what they track, right? Don't just go by the name of the ETF. There's too many retail investors that just look at the name of it and they don't do, 5 minutes of investigation to figure out what it is. Well, UNG and USO is the one that tracks crude, right? They are holding short-term futures contracts. So what happens is every month, or however the fund is set up, and you can find all the information just by going to the website. You could find what they own, right? They'll have a section on what futures contracts they own. So what happens is, if they're constantly owning front month futures, right, and many of them will have like monthly contracts of nat gas or oil, right? And what they'll have, if they're holding, let's say, right now it's October, today's October, the 6th, but let's say that they're holding, let's say, November and December contracts. As November approaches, what they will do is they will roll that contract out to January. The issue with that is you have major slippage in the product, and you will find that over time the product will not track closely what the underlying is, right? You'll notice big differences in that, right? And like, so question, there's actually a leveraged one out there too, right? This is Boyle, which is levered. Now you could see where this thing, has traded. Now notice the price up here is 1100. This thing actually never traded at 1100, right? What has to happen is the issuer, and this is a sure sign issue, that if the product is not very good, you'll see that there's these things, right? Instead of forward splits, right? Normally like a stock when it splits, this is 2 for 1 or 3 for 1. Instead, these ETFs have not forward stock splits, but reverse stock splits. And notice that it's not like a 2 for 1, right? Stock split, or a 1 for 2. It's a 1 for 20. Because if they don't reverse split this, what happens to the stock price? The price of this goes to zero, right? And it's just because of the mechanics of what they have to do, which with that constant rolling of the contract. So be very mindful of that. Now, does it mean that you can't make money in this? No, it doesn't mean that you can't make money in it. It's just over time, it's going to have that slippage. And if the underlying, whatever it's tracking, doesn't trend, or if it does trend and go sideways or go down, right, the product will go down much faster than the underlying asset. Like, here's another example, UVXY, right? You'll never ever see me quote this thing because it's a piece of junk. Um, but look at all the reverse splits. If they don't have a reverse split with this for every 2 years, it will go to zero. Now, does that mean, so people begin to think, oh, maybe I should be shorting something that eventually is going to go to zero? Well, people used to do that all the time, and the product was called XIV, because what happens is, and as I said, you can make money with these products, but you need a fast, aggressive move, kind of like an option, right? You need to have that move happen very quickly for you to make money in an option, right? Depending on what your maturity is, of course. But so if you get a fast move in your direction, you will be able to make money with it. Just like what happened with XIV a couple of years ago, the thing blew up to the upside because everybody was shorting it for the fact that these products usually go down over time, right? But it doesn't mean at one point or another, the volatility could explode in these things. Again, why would it explode or have a short squeeze? Because everybody is short these things because of the fundamentals of the product flaw. But if the underlying takes off, I hope this makes sense. So if the underlying takes off, right, it will bring this with it. And you could see Boyle is up 7% today, right? Let's check what the short interest is on Boyle. Because again, my message is not to say that you can't make money in them, but they're really not designed to hold for a long time, right? So the short interest, let's see if I can find it here. The short interest, can I find it here? I don't see it here, but I'll have to bring it up in another. Here's the short interest. I guess it's not tracking that much. Again, I'll have to. You can find another place. But the bottom line is, with leveraged ETFs, right? They were never designed to hold for more than one day. Again, it's not to say that you can't make money in them. They're just designed as a day trading product, right? And if you look at the prospectus of any of these, right? Nobody wants to do that. But if you go through and you go to the company's website, you will find in the prospectuses that these are day trading. Anything with leverage is supposed to be a day trading product, because with leverage, they have to daily rebalance it at the end of the day. Okay, so they can work for you short term if you get a nice move in your direction, or if you get a nice trending market. But as soon as the underlying that it tracks does not begin to trend any longer, it will have more slippage. The slippage will add up, and it will very much underperform the products that it's trying to track. Okay, thanks for watching. I hope that helps.